Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. Today, we want to talk to famous dividend payers, Sibanye-Stillwater. Actually, today they are paying out the dividend. One of the best and largest platinum and palladium producers in the world, and the number 3 in gold. And James Wellsted, the Executive Vice President, Investor Relations and Corporate Affairs, is here with us today. Good morning to Africa. How are you?
Hi, Jochen. Good morning to you too, and good morning to your viewers, and nice to be chatting to you again.
Yeah, it's great to have you here for an update. Thank you very much for taking the time. I have to disclose also I'm a shareholder and proud shareholder of the company. Really happy to get that I get my dividend again today, as you are probably, James.
I'm looking at my bank accounts every second.
Yeah. Me too. Fantastic. No, that's always great to get some income without working. You just brought out and published your 6 months results, ended on the 30th June 2022. And I would say it was not an easy first half year for you guys. I mean, you had a strike in South Africa on the gold division. You had a flooding on the platinum palladium division in the US. So let's start with South Africa, with the strike on gold. You made a $202 million loss. So what is going on there now?
So, I mean, it was a kind of culmination of a number of things, but it was really, really a very challenging period. We started the year slowly in South Africa. First of all, you may recall that last year, we had a big regression in safety with a number of an increase in the fatalities at our South African operations. So there was a very, very strong focus from management and the board on addressing the safety issues, which I'm proud to say that we seem to have done. We've seen a significant improvement this year, but we had to take quite stern action and quite decisive action towards the end of last year to stop this kind of trend of fatality or fatal incidents that we're experiencing. So we actually took a decision, which is quite unusual in the mining industry, to actually shut down all our operations in November to do full audits of the workplaces. And then in December, certain high risk, what we had perceived as high risk shafts, were actually shut down for extended periods. And that resulted in quite a slow start again in the beginning of the year. We also at Beatrix made a decision in December to actually do some remedial work on a tailings facility. It wasn't at risk, but it wasn't quite up to the standards that we require. So we actually shut all processing at Beatrix, which is about 20% of the gold that we produce, until we had buttressed that tailings facility. And we completed that in March. But in that time as well, as you said, the unions called a strike and we locked employees out. I think that was the 9th of March. And then we had a 3-month strike, which only ended on the 13th of June. So the gold operations effectively operate. I mean, they virtually produce no gold in the first half of the year. They are ramping up now to normalized levels. They should be at normalized levels by now. And then at the US PGM operations, we were affected by a really severe weather event. One in more than 100-year flood that flooded the entire Montana region. Didn't actually affect our mine. I mean, there was no damage as such to infrastructure, but washed away the roads and damaged the bridges which provide access to the mine, which is up in the valley. So that meant that we lost over a month of production from the US PGM operations, about 60,000 ounces. And as a result of that, we had to bring down guidance for the year as well. Fortunately, on the positive side, the South African PGM operations continued to really deliver strong performance. Again, costs actually came down, or on an all-in sustaining cost basis were lower than inflation, where some of our peers, or most of our peers, have been reporting double-digit increases, and cash flow was extremely positive, even with the pullback in the PGM prices. So as a group, we were still in a net cash positive position and we're able to deliver the third highest operating profit that we had ever delivered as a group, despite all of those problems. So I think the outlook is quite positive from here for the second half of the year.
Fantastic. I love to hear that. As said, as a shareholder, that's fantastic, because it looks like also, sometimes you have the feeling with managements, oh, they can only do it when the sun is shining. But when the storm comes, sometimes managements are totally overwhelmed and run away or whatever, or do not act. But you guys have acted, and I really appreciate this. And I think you have done the right things, that things are really moving. With the strike of the unions in your gold section in South Africa, have you had achieved a longer term agreement? Is it inflationary linked? Meaning, do we maybe have a strike next year again, or is now for the next 2 or 3 years a little bit more all in quietness and organized, I would call it?
Yeah, so this is the 3-year agreement. We again, what we stood our ground for was an inflation-linked agreement, which we achieved, and some other concessions from the unions. So it was a tough period and obviously impacted on all stakeholders. But ultimately, what we are keeping in mind is that if we give in to these above-inflation demands, increased demands, it's going to have an impact on the sustainability of the operations. And that has negative consequences for all other stakeholders. Our employees will lose their jobs earlier. Communities will not have the support that we provide. Small and medium enterprises will lose the key customer. So we need to take all of those things into consideration when we in these negotiations with the unions. And we don't allow ourselves to be bullied just to prevent short-term disruptions, but by giving away our future of our operations. So we've taken that position. We've seen some of our peers in South Africa have taken a different route where they've actually accepted the union demands, but then you start seeing it in the costs. As I said, a lot of our peers coming through with double-digit increases, and we've been able to maintain ours at inflation-linked levels. So it does come through in the end.
Absolutely. And I think this is also a good thing. Now you can plan for 3 years and you are fine. And I think also we might see the inflation high next year already when there is maybe a mild recession also kicks in. So I think you have done that extremely well. With the flooding in the US, is that insured? Do you have to build the roads and the infrastructure by yourself again? How does that work?
So the road and infrastructure, as I said, that's state land or the local authorities. They'll have to build those roads, and that was part of the issue why it took so long, because it's not we can't just go in and do that. We've got to get permissions from landowners and all sorts of things. So we are assisting all of the local authorities and people, community, etc., to restore roads and access ways. But it's not for our cost. We do have an insurance claim out, but we haven't yet received or finalized any outcome on that insurance claim.
Super. So that would mean that now things are going the more normal way, the smooth way, because I mean, despite floodings and strikes, the gold, platinum, and palladium is still in the ground to be lifted.
Yes, correct. So, I mean, as I said, our gold operations are so it's just deferred production, as you say. It's not lost production. So our gold operations are now back at normal operating levels, and our US operations will also be. Our SAP gem operations have been running smoothly throughout. We are having to cope with stage 6 load shedding in South Africa, where Eskom, the state utility, is unable to supply electricity to the country. So we're having to deal with it, but I think we're managing it quite well. So the second half of the year should be a lot better than the first half of the year.
Okay, then one totally different question before we come to the battery metals. What's going on with the uranium you still have in the reserve in the tailings? Because prices have now stabilized around the mark. I see it very soon going to the $60 mark. Have you pursued a little bit further your plans to reprocess those tailings and lift the uranium? Because I call it the $1 billion chance.
Yeah, listen, there's a lot of work going on behind the scenes. I'm not actively involved in it myself, but we are looking at various options. And as you say, with the price where it is now, this will be a very valuable asset for us, or can be a very, very valuable asset. What we've got to do is just make sure that we unlock that value in the most efficient way. So that's what the business development team is busy with at the moment.
Fantastic. Yeah, also business development team, that's a nice keyword. Let's switch to your let's call it the battery metals division. You guys did also great presentation last week with SFA, and I must say I was really impressed what you have achieved so far. And it looks to me like that you are doing it like a strategic execution now with the battery metals. You started with that already like in 2019, then 2021 you bought Caliber, Sandouville, Rhyolite Ridge project, New Century, the tailings retreatment, and it is like a great execution of a strategic plan. So when will we see the real first income then? What's going on with that? And is that also like a little bit a move out of Africa? It looks to me a little bit like to diversify the group more.
So yes, I mean, we do plan to internationalize more. We see benefits of being more diversified globally. And obviously South Africa is a challenging environment at the moment. And there isn't a lot of opportunity in South Africa for battery metals, which is where we are focusing our efforts. So you're right. I mean, we have been looking at this for quite a while. We started looking about 2017 while we were still executing our PGM strategy. And we identified, obviously, that battery electric vehicles were going to become a bigger part of the global car market. So trying to understand, more about battery EVs and the penetration rates and the evolution of the drivetrain. And we decided in 2019 that we needed to bring in some expertise because we didn't really have that in-house, and hence the relationship with SFA began. And SFA really spent about 1.5 years looking at drivetrain evolution, battery chemistry, and then which metals were going to be critical for future battery development, and then looking at the fundamentals of those markets, the supply-demand fundamentals. And what we identified was that, and we are convinced that this is going to come through, and it is starting to be recognized by the market, is that there are going to be significant deficits in most of these key battery metals, being lithium, nickel, cobalt, etc. And if you look at what's happened since COVID, since 2020, there's been 120% increase in the forecasts of battery electric vehicle penetration into the auto sector. So over 30% of the sector by 2030 is what a lot of people are estimating. The problem is that those forecasts and those assumptions are based on, firstly, regulatory announcements. So the Boris Johnson in London saying we're not going to have any more internal combustion engines in London, or Sarkozy in France, or whoever it may be, making these political statements. And then also the automakers themselves, VW saying we're going to go entirely EV or 70% EV by such and such a date. And the auto analysts then put those numbers straight into their models and come out with those projections. But nobody's bothered to look at where that metal's going to come from and at what cost. And only now, I think, similar to what we're experiencing in Europe with the energy issues that that Europe's dealing with at the moment, this is exactly the same situation. There's going to be huge deficits, and what we've tried to do from a strategic perspective is to position ourselves close to the developing battery industries. So in Europe, Germany, Poland, etc., and in France, and then also in the US. So we've acquired Caliber Lithium in Finland, which is going to be delivering lithium hydroxide into the European market. Sandouville nickel processing facility in France, and we're looking at developing a recycling facility and a battery metal facility, again, to deliver into the French gigabyte factories. We've aligned with Verkor in France. And then in the US, we've got Rhyolite Ridge, again, not far from the Tesla gigafactory and all of the other gigafactories that are being built on the lower eastern seaboard. So we think that that's going to be a big advantage going forward. Close to the end customer, you're not exposed to shipping rates and having to transport these ores or products over long distances. We think that we're going to at some point be able to get a premium for these products.
Absolutely. No, I see it the same way. And when do you think with most of the production can start? Is like 2025 a good year for that?
So Keliber, yes. The issue we're having, and this is one of the reasons why we think that there is going to be such a big deficit, it takes a long time to bring a mine online, get the permitting, etc. So with Keliber, we're quite advanced. We've got the permitting for the processing plant, but we're just waiting for final permits for the mines. We have now we started with a 30% stake in Keliber last year. In the first quarter of the year, we bought that for 30 million euros. And what we've done now is we exercised a right that we had to take our shareholding up to over 50%. And then we've also made an offer to minorities. So we currently own over 80% of Keliber. So we've consolidated our position there. We think it's a very, very exciting project, and there's potential for upside in terms of production as well. In France, we are busy integrating the Sandouville facility at the moment. As you said, it made about a small EBITDA profit in the last period. We need to get the volumes up so that it can make a profit on a sustainable basis. But the interest is really more around building those recycling operations, and then also the battery metal facility, because that's where the upside's going to come from.
Definitely.
So yeah, I mean, Keliber should be online. We will be contributing to the group by about 2026. And same with Sandouville would be a similar time frame. At Rhyolite Ridge in the US, we are encountering again some environmental issues. There's a plant called a TM's buckwheat, which grows in that area, and we're doing various propagation studies and looking at ways maybe even redesign the pit so we can mine around that area until we've solved that issue. But on the positive side, what we have seen is positive legislation like the IRA in the US, where they are promoting the use of, or basically battery manufacturers have to use locally produced inputs or from trade partners of the US. So that's going to make a big difference to getting these mines permitted, etc. So we're quite positive about that in the longer term.
Fantastic. Super. So that sounds like a great game plan for the rest of the decade, I would call it. And you are really diversifying from precious metals into the battery metals. And what I really like is your recycling theme, because my feeling is within the next, let's say, 5 years, I think recycling could be substantial, because then the first generation of battery cars might be given back, right?
Yeah, that's right, and a lot of it's also going to be from scrap from the gigafactories, and hence we're also aligning ourselves with those gigafactories like Verkor, which is going to be the first French gigafactory. So that's part of the strategy. But we would have liked to have done more acquisitions and built a bigger portfolio. But as you know, I mean, lithium prices, for instance, went from $13,000 per ton in the beginning of last year to over 80,000. The nickel price was at record levels. So it was very difficult to execute in that kind of market, quite frothy, and you end up overpaying for assets. So we decided to really take it a bit slower. We are going into an economic downturn that could extend for, we're not sure how long that's going to extend for. But what that will do is it will provide opportunities at some point. And we're going into that downturn in very good financial position, net cash on our balance sheet, and generating cash, very strong cash flows from our operations. And with the gold and the US PGMs building back up to normal levels, we think we'll be very well placed to continue adding value.
Fantastic, super. So we look forward to the second half of this year, which is almost halfly done, I would say. But it looks like that the second half is very, very promising, right?
Yeah, it certainly does. I mean, we're obviously having these challenges with Eskom, but we are managing those, and hopefully it won't be too much of a problem. But you can see the PGM prices are holding up quite nicely because of concerns of the impact on the PGM sector, because South Africa supplies 70% of global PGM. So, that's positive for us at the moment because we are still producing at normal rates.
Fantastic. Yeah, James, thank you very much for over 20 minutes discussing Sibanye-Stillwater. It looks really great. Thanks for the dividend today. Well done. And I would say keep it going, and we talk soon. Thank you very much, James.
Thank you, Jochen.
Thank you. Yeah, ladies and gentlemen, that was James Wellsted, the Executive Vice President, Investor Relations and Corporate Affairs of Sibanye-Stillwater. You heard it, a really challenging first half for the company, but this is what a good management is doing. They managed it, and this is how it should be. And today is a dividend payout. It's Monday the 19th when we record this. And it all looks really, really good. And the company is still in good shape. And do not forget, they did not lose the production, it is just postponed, and this is a major difference. So now they are digging out the gold, palladium and platinum in the second half, what they should have done in the first half, but the strike is settled, 3 years loan agreement, that's what we like. Now it's all plannable, and they diversified the company really internationally into the future metals, meaning energy metals and battery metals. That's what we want to see. So this is a great, really strategic approach. That's what we want to see and what we love as shareholders. And of course, don't forget, the company is paying a nice dividend with approximately a 7% yield. So make sure you have some Sibanye, have a look at the company. Thanks for watching us, and bye-bye from Switzerland.